China and India are the biggest gold consumers in the world, and according to the World Gold Council, Indian women hold around 24 tons of gold in the form of jewelry, which is around 11% of total gold reserves. And so what happens in the Chinese and Indian markets has a massive impact into the global gold market. Changes to supply and demand within China and within India can have a big impact on local prices, which means that buyers either pay a premium or pay a discount to global benchmark gold rates. So let's take a look at how this has changed over the past 12 months, because over the past year, we have seen a big surge in the gold spot price. Let's look into how this has impacted those local markets, but also what this could mean generally for the international physical gold markets. Viewers that have visited the Auronum website's articles section are very aware of this type of analysis and what it means for your investments. There is a link in the description which takes you to our latest market intelligence reports, where you can see the latest analysis for all three of the precious metals. Looking at the world's largest consumer of gold, Chinese buyers was paying around a 50% premium over international gold prices at the beginning of 2024. As we know, the gold spot price began to aggressively go into an uptrend just 1 month later. Gold premiums dipped slightly, but remained very stable despite the rise in price. However, by late summer of that year, the Chinese gold market began trading at a discount. Clearly, buyers were being off-put by higher gold prices, causing dealers to offer stock at a discount to current spot prices, signalling a dip in Chinese buying. This is something that I can confirm happened in the British market as well, where the spot price went up so aggressively. We saw a wave of selling, and we noticed that other top-tier bullion companies were offering below spot price in their buybacks, and we had a wave of selling at these lower rates. The reason why everyone was paying less was because the buyers were a lot more uncertain as to whether this gold price would continue going up. And so there was so much stock available, the premium actually went negative. So a lot of our stock at the time was actually sold at a discount to the spot price. I think this is something worth pointing out, because investors generally hold gold as an insurance against their home currencies depreciating. But if the gold price rises a few percent against your home currency and you sell, are you really as protected against a huge collapse as you think? Interestingly, the market in China returned to a premium from the beginning of 2025. We have to bear in mind that demand usually increases prior to the Chinese New Year celebration, which was on the 29th of January in 2025. However, the premium has continued so far into February, showing signs that Chinese buyers are coming back into the market. Before we take a look at the Indian market, something that we have to bear in mind is that in the summer of 2024, there was a change to the import duties in India. They reduced it from 15% down to 6% to combat gold smuggling. This likely distorted some of the demand figures, because a 9% cut in the import duty would have had a big impact on demand, and it also would have eroded a lot of the gold price appreciation during that period. India's market is more volatile than China's, potentially showing that Indian buyers are much more price sensitive. You can see sharp collapses in the discounts offered in May and July of 2024, which coincided with rises in the gold spot price. As Chinese premiums have risen since the beginning of 2025, the opposite has occurred in India. However, the discount has been reducing over recent weeks, even when the gold spot price has been rising. Something worth mentioning that might explain this is the Indian rupee has appreciated against the US dollar since the turn of the year. There is evidence of weaker Indian gold demand though. If we review gold jewelry sales data in India, you can see that sales have been steadily declining since 2022. Demand was also down in 2024 year on year, which is likely a reflection of higher gold prices. India is the world's second largest gold consumer, and if we're seeing a bit of a slowdown in demand, what could this mean for wider gold prices? There's actually two sides of this argument, and let's start with the bearish side first. The grey-blue curve on this chart shows in dollars how far the gold spot price is from its 200-day moving average. This is a key technical moving average which fund managers monitor, and given that there are around 250 trading days in a year, the 200-day moving average is a good barometer for momentum. The fact that gold has risen so far from its 200-day moving average is testament to the strength of this current gold rally. Gold is currently $325 above its 200-day moving average. In the past, when the gold price has stretched this far, it has always resulted in a correction which saw the spot price fall below the 200-day moving average. Could weaker Indian gold buying and also the fact that gold technically has potentially overstretched according to where it is in relation to its 200-day moving average be a signal that gold could be due a correction? Anyone that's watched the videos on this channel will see that one by one we've been analysing assets such as housing and platinum, and we can determine that historically gold is a little bit overvalued compared to some other assets. As with most things, there is a different way of interpreting what we've just discussed in the video because there is actually a bullish case to be made here. Gold rose 31% in 2024, and in the first 2 months in 2022, we're up another 7%. Despite that we are continually seeing new record highs throughout that period, Indian gold demand has only gone down by 2% when it comes to gold jewellery. That is a testament to massive demand for gold. The data suggests that Indian gold buying is slightly down year on year. So what this could mean is that the demand is waiting for lower gold prices. And in the event that we get a meaningful correction in gold, that capital could rush into the gold market and begin buying up physical and taking it out of the international markets. So if we do see a correction, the gold price could be quite well supported. Clearly, there is a couple of signs to suggest that gold might have a technical correction at one stage, which is part of a normal, healthy market. But when you look at the potential for Indian demand to increase on a dip in the gold price, the physical market could be quite well supported on a dip. But the other thing to note, and more importantly, is the world's largest consumer of gold in China. Their demand is already increasing even without a correction, so potentially we are seeing quite good demand considering prices are near record highs, which is a very encouraging sign.